Hey guys, it's the Market Sniper. That's right, coming back at you on the FX markets and all other markets all around reset, the great financial reset, how you can build wealth during the World Economic Forum and all the ne'er-do-wells plans for crashing this economy with a great Fed mistake. Intended, accidentally, on purpose mistake that is coming away, that's going to see a tightening of interest rates in an environment where we have an economic recession, and there are no normal recessions. They're all mega, and it gets worse for the great winter of discontent, which you can also watch our reset content on the LBC, with LBC tokens on the Odyssey channel, where we speak of the great winter of discontent that is coming. More on that on LBC. So before you do anything else, I will be doing a video probably within a week's time, maybe this weekend, maybe just after, around more than just a milkshake, which is going to deal with everything that is not just about dollar dominance in both the FX markets and the megas and where the big trades are. There's two community trades that I'll be talking about that I will be revealed for the first time in that video. But before I reveal it, I will tell you what those two FX trades are on our new Instagram account. So if you are an Instagram guy, go and type in Instagram at the Market Sniper. It must have this logo in it. Then you know you're in the right place, and you click on that logo and you will find us. In that space, you will see many people complain. I say, Francis, your videos are so long, so laborious, YouTube, I haven't got time to watch 5 minutes, 10 minutes, hour, half hour, 45 minutes, hour and a half, whatever the case may be. If you're into short form, single snippets of quality, we will be putting those up in terms of our Instagram. There's no selling, there's no marketing, there's no anything. Engage, chat, tell us which ones you like, if you enjoyed it. Help us help you. The more you share it, the more we'll look into some of our legacy reels and put more of it up there. So far, 94 posts, 1,100 followers. Come and join us for the triggering events. You can see short clip with subtitles. What's a key level with what's significant about trading in any specific given event. We'll continue to add to this pool of knowledge. All you have to do is subscribe at the Market Sniper. Watch out for scammy followers, just like the people that reply with WhatsApp numbers in these YouTube comments. They are all thieves that are stealing our picture. Let's get on with the video after that chat. I was showing you the 10-year. So we'll announce those two currencies before the video goes out on our Instagram channel to anyone who's a follower if you're not already following. Also, if you haven't subscribed, you will miss the YouTube channel. It's going to be a humdinger, and I'm going to let you in on two other FX trades that my community are busy wolfing up at the moment right now. And I'm already begun making good money on one particular that we'll be telling you. And they are macro moves, and it doesn't involve the dollar. More than just a milkshake. Watch out for that video. This is the government 10-year yield. So here you go. Now, we warned that overall we are seeing yields going up, but there was a threat that we drew. There was a head and shoulder, and we said that has had a triggering move, and there's a threat. However, the invalidation for that right shoulder is the top of that right shoulder, and that has occurred. So this went contrary to everything we were about. We're about the dollar going up, rates going up and tightening until we have serious collapse. I think that's already begun in many instances. In actual fact, despite the amazing non-farm payrolls numbers, over 50% of the big major companies are all doing layoffs. So it's unbelievable the lies, damn lies, and statistics that come out of the birth-death model and non-farm. But anyway, the key point of this is that this is an invalidated pattern now, and this is rates climbing. Now, of course, the Chief Satan, it's Jackson Hole Day today, 25th, 26th, 27th, I think. They're going to be chit-chatting and jabbering, but they always conveniently leak. There's always a leak, isn't there? You would think, isn't that funny? Wouldn't it be useful to be that guy that knows the information in that leak before it gets leaked? You think a few folks would make some money in the FX market? Well, you probably noticed during this period that the dollar's been kind of strong. Our USD Korean won pushed up pretty far. So let's take you to the FX. But first, I just show you that threat has started to be negated now. It's a very difficult draw to turn this into a head and shoulder and make this a right shoulder. It starts to become a little bit less practical. The lows that were reached here are well different to my apologies, right shoulder, I said left, are well far away from the left shoulder's lows. So to do this as a kind of draw would be kind of tricky. And that, of course, would not then encompass that. It would be somewhere here, in fact. It's a difficult draw, and it's far less likely. It's far less likely that this is a head and shoulder. This low won't go for me in most instances. Yet, you will find people that will say declining neckline and all of these kind of things. We teach you and the Market Sniper all about complexity and head and shoulders. Go to themarketsniper.com. Not only will you be taught, we just recently updated with case examples and reminded the guys, you'll actually see it in practical implementation. We were doing, giving a couple of examples of how it worked amazingly well on the maker and another market that you would get both the charts for the images and the learnings with my regular updates, which I've just finished doing for my community. So every day, typically they hear from me at least once with a visual, and often voicemails and various other things that I handled, and the key trades, how they're moving. So this largely risk-wise is being moved away, and I am actually going to remove all of this because I don't think it's happened. I'll put it back on if we get suddenly very weak. Bear in mind, however, that if you trade the Jackson Hole news and it's not uber hawkish, the dollar may not go up anymore. In fact, if everything that was in line with the leak and the move has already happened, so let's shimmy on to the dollar index, has already taken place, it becomes a case of buy on the rumor, sell on the fact. Of course, it wasn't a rumor. The insiders knew what was being leaked and what's likely to be said. And if it performs roughly in line with that, then there's no more doing. And actually, you can sometimes in these instances get a sell off because it got baked in. And that's fairly typical of once the news is out there. Then the market starts thinking forward again and starts pricing the next news. And then sometimes after that pullback, you can then reassert to the upside. So here we have the dollar index. A bit slow on the loading. So we were quick to point out that this channel was broken, that you can see here on the orange box quite some time ago, and that this was a very bullish event. In fact, the failure to meet what we call our basing descending Rhine line inside the channel was already a sign that it was losing some of that downside and momentum. Yes, we saw the rising wedge. Yes, Bidenomics, we got flat inflation on the previous month, which was already way up at 8.5% after dumping half our, 180 billion barrels of oil to drop aviation fuel, cars, diesel, most of the fuels that you use for driving. But I can say this has run straight up and literally kissed the same level of a line. Some will be going, double top, double top, double top. I fear not for you that you will get what you want if you're looking for a reversal. Yes, it reversed here. That's how far as it's taken it at this point. But overall, I would say that this is looking like probably falling wedge category over here. You can go up, you can go down, you could even have a spill out the bottom for a down and then still dip back up. But even if it came back down, excuse me, my apologies, to the 106 level, we would probably end up forming some form of ascending continuation pattern. So the bull bias remains there. Europe is wrecked, my friends. Energy has wrecked Europe and many other things. It wasn't just left down to Europe. They did a pretty good handy job. The euro is a busted flush, as is the Asian FX. We'll detail all of this and more, which ones are going to be strong and why it's more than simply just only about dollar dominance, albeit dollar dominance is a very large part. So overall, we see this 109 being taken out in time. I don't think necessarily it comes out as a natural event of Jackson Hole. It might. That would be pretty strong. I think you can actually afford to pull back quite a bit, but falling wedges are often continuation patterns. So we could have a little bit of bounce around, even a dip out the bottom and still go higher or come back up to the 109 levels. So watch out the dollar bears. By the way, you are now comfortably and regularly trading below parity on the euro. That's right, a dollar is worth more than a euro. And we've already said to you that we feel that you're going to see the below 0.85 on the euro. Remember, we said there'd be a rally after the first touch break of the parity move. Yes, you got it. Exhaustive, came up to our just about our first interim target and our funnel level, and then down, bounce, tip tap toe at our second interim level, and down, down, down. Now it's properly run the parity level, and that's a bit of a shooting star right there, right now on the 8 hourly. So you get 3 of those sessions in a day, and so far it's not looking crack on at all. And this is also far more severe than just the wick within a single 8-hour session that you got on the original parity run, which is where all the headlines. Now people are getting used to it. It's no longer news. Wait till it runs lower and lower still. The greatest hide is the fact that this is an orchestrated takedown designed to create dollar strength, create a absolutely vicious recession that's going to see asset prices dump immensely. And there will be layoffs, there will be a lack of liquidity, and the market will be broken slowly and surely on account of curing inflation that they of course created when they printed 6, 7, who knows, 4.5 trillion. Such a big number, people don't quantify. I'm not going to tell you why and how. You've heard it enough times on this channel. So look at your euro Swiss franc as an example, continually eating its way down, rally up, down. By the way, so let's just do this as a slight review of our big FX trades that we gave to many people. And that's part and parcel behind this. And we said in our community, this is a huge rejection. I'm going to just take the eye off there to take all the lines and magic marking workings. I reiterated over here that you're going to have a very ugly spill. That shooting star, that second attempt rally, and then that reversal and sell-off. This has just been pure acceleration in the loss of value of the euro to the Swiss franc. What do you think is going to happen? What is a rich German going to do? What is a rich Frenchman going to do? Don't forget, there's a German section even in Switzerland. There's a French section. There's an Italian section. And you don't even have to have a section there. You can still open a bank account there if you're Portuguese, Greek, whatever the case may be. Are you going to want to hold this currency? I don't want to hold euros. I want to get just in time the euros I need if I have to spend euros, and the rest I'm leaving in dollars. Nobody should be holding euros. But if you live, work, earn in euros, good luck. You're going to have a very strongly devalued currency. You're going to have an exponential level of increase in your energy, and it is ugly. So the first call was up top here, 108s for the euro Swiss franc. How have we done so far? Let's draw it for you on the big time frames. Yes, don't forget there's always carry costs with any trade, but you have done famously well. That is an extremely steep risk reward line. We call that the line of efficiency. We give things names. We understand trading, and we need a language and a lexicon. That is a line of efficiency to the downside. It is exceedingly steep, only surpassed by peg fail and the final sell-off over there in terms of momentum. So that is a success. Euro Swiss franc shorts. How did the Euro USD go that we've also given you some while ago? And regularly on Twitter I'll get guys, oh, the Euro Swiss franc, it stopped going my way. It's almost 100% your way on the big time frame. If you want to sit on a 5 minute and wet the bed every time they do a mini little pump, then you're on a different level. You're not seeing the wood for the trees at all. So let's put this head and shoulder on. We called this head and shoulder. This risk reward, if you're still in your shorts of the Euro USD, which you should be, is now reached 32. We got you in short up top here, good people, at 118 on a right shoulder on a complex head and shoulders. Repeat, only to be learnt by people that have registered at themarketsniper.com, book to call, and are part of our community. How most people missed that was a head and shoulder, missed the short at 118, now finding it 99.8, going for sub 0.85 in our opinion in the Euro USD, and further with overperformance. How about that for a line of efficiency, we ask? There you go. That's your trade. These have been given for free on this channel to help you build wealth. But guess what? The community got it first. They got in earlier. You get notified in retrospect. There's 2 other trades I'm going to tell you about on Instagram, at the Market Sniper on Instagram. I'll tell you there first. Only people following will see it first. And they are already, the community have already in there. This boosts your risk reward because your stops are tighter, your entries are earlier. The big gravy is huge. because these are setups within setups that multiply yourself to wealth. There's your risk reward. There's your line of efficiency for that trade. And you saw the risk reward over the 30s, in the 30 marks, given to you on this channel right here. This is the money you're not making. They have to break these things in that way. They're going to want to keep confusing you. The headlines are designed to say it's done too much too soon, to get you counter trend trading and all of those things. We gave you the option of the USDJPY as an alternative to those who couldn't trade the Dixie. This has gone and gone and gone. This reversal over here, right there, we were all over it right there, and we gave you the exact same, very similar, the upside down version of the Euro USD. Let's see if there's any draws that I've got on here. Might not have. And you've been going up, up, and up, and up, and up. And we said to 7.83, and you've got plenty more to go. Note the speed that you have moved. These have been very, very strong, incredible moves. And I can tell you that FX is the new crypto, and they're going to get worse and bigger and stronger. That's right. In time, in time. Don't say tomorrow, next week. In time as the takedown goes full speed ahead. All of these have been given to you. Plus, don't forget the USDJPY. Squeezy that Japanesey, my friends. And you know about this fella, and it's our opinion that it's at a secondary high now, where it might have a small amount of easing before going further. Look at the rate of ascent on this trade, guys. Have you ever made that amount of pips in that amount of time? These are real, unbelievable, mega alpha, including carry costs. Don't forget their interest rates are lower than the American interest rates. You should literally have very low carry costs for these trades. These were given to you. It's not like the USDJPY that can only go one way and got crazy Erdogan on the other side there. So this is what's been happening. Now, we've also said to you, pegs will fail. So don't forget, you're on notice about the USD Hong Kong dollar. And we've spoken of that plenty. It dipped and then it rallied again. And it's our opinion that this will come up and make another secondary high and probably squeeze up in an ascending fashion again. Something like that. So all that's happened for this in terms of this original little squeeze that we said we could go either way, and it's very unlikely the first small one goes in our favor. We're not yet ready, is that you sell off and you go over and you go around and you sell off. I don't think you'll sell off there. Any dips on this thing of this range, and I'm in and I'm a buyer. So it's just a stacking. It's a stacking and holding. It's almost like a hodl position in a trade. By the way, USD Hong Kong Hang Seng. Reason it's got a little, don't forget, we've also said if you don't like that kind of trading, you can have the short over here. You've just had a little bump up. Right now it's a perfect time for shorting, looking for 16,482. We've given that to you. We've given that to you as an alternative if you can't live with it. But of course, our community members got it first. But that's quite a reasonable little pullback. You're getting in, you're getting in almost as good as the guys might have got in up top here. And you're not having to hold that little period where it churned for a while. So that's also good. What else have we said? We've also said to you, man, this yen is terrible. We've also said to you that this is macro is the game. So for our crypto friends, Jackson Hole is important because of the Fed is macro right now, and macro is the game of everything. This is affecting equities, FX, this is the big ground shakes, this is interest rate policy, this is economic crash, this is all of these key elements. So let's go down into the other traditional markets, but we'll come back up to mention Bitcoin for a short period, although we do that on our Crypto Sniper channel on a far greater scale, so don't forget to go there. Here we go. Oil. So I want to talk to you about oil. So the interesting thing about oil that's happening right now is despite this dollar strength, you have run a channel to the upside and are showing some return to strength. Look at this on the WTI. There you can see the break. You can see a break out of the channel. It is a significant one. It's very similar to the dollar index's break on that. And I'll fatten it up a little bit. There is real significance to that. That puts you at 95 on the WTI, and you through the 100 again on Brent. This is a channel sell-off. and that is a failure to revisit again the lower side of the channel, and then an indication that you're now breaking up. That is a cessation of downside. Well done, Mr. Biden, for your sell-offs here and your crashing of your oil there. But now guess what? You're going to buy it back more. You've blown some of your taxpayers' money just to achieve a little bit of a rally cry. Oh, we're winning on inflation. No, you are not. You created it. The Fed created it. Your chief masters at the Fed created it. And here you can see it on the Brent contract, the UK oil as it's known on TradingView. Again, a break out of the channel and quite strong and taking out the previous high. That's a W bottom in essence. It's a tiny bit higher on your left side. This is how you reverse with momentum and running a neckline there. Neckline being the key level of significance. This is all a larger macro flag on a bigger time frame. You should throw your splitter in there as we do. People are learning and copying like hell. The man of the ministry. Let me tell you, copying is flattery. Many people think they can watch YouTube videos and they've got it all sussed. Good luck if you want something on the cheap. You won't see it. You won't learn all of the aspects. You won't learn it practically. But good luck. I like anyone to get any form of value. But you'll get more when you're in the community. Don't forget, themarketsniper.com. Also, the Instagram account. Go and join up right now. We will be utilizing that. And it'll be short form. For all those that hate long form chats, like this one, for example, it'll be short form only, single bullet points. Take a single message and that's it. You're done for the day. We'll have new content released on a weekly basis at minimum, sometimes maybe more than one piece. Okay, natural gas. Well, this is an energy, of course, and it's very important. And the key element of this natural gas is Europe is particularly exposed to this. And the futures on natural gas, oh boy, they're getting more and more expensive. This is just such a runaway melt up. It is a disaster for the Eurozone, and it's an intended disaster. It's an intended disaster in my view. And that's part of introducing their central bank digital tokens, which will eliminate your freedom, force you to comply, have social scores attached, biometrics, and everything else. I'll be doing Reset Sniper videos on biometrics and the surge in biometrics, having to use thumbprints to get mobile phone contracts, selfies now to protect your bank account from people who do hacks. I wonder if they aren't the originators of the hacks so that they can force you into or selling that information to ne'er-do-wells to hack you, and then they can say, do your banking with a selfie. Oh, facial biometrics as well. Isn't that so lovely and sexy? So gas is up. I also showed to the community one particular contract, which is Robusta coffee. Let me tell you, coffee is going to get a whole bunch more expensive. It is one of the biggest agri futures contracts, and it's one I keep an eye on. And we were long way back. Let me just take you into way back so that you can see that on an HVF, on a reversal. Over here on a complex head and shoulders, where do you go to find out how to draw complex head and shoulders, how best to utilize them? You think you've learned it all here? Good luck. Themarketsniper.com, of course. Over. This is now a macro HVF. We expect this soft to chronically overperform, and it is a very big contract. It's a very needed. It's the more affordable version of Arabica. In inflation times, people are still going to want their caffeine jolt, and this is a very impulsive move since the breakout over here, and you'll find out our macro targets and everything when you come on board. So we watch the softs. This is the biggest contract of softs. And by the way, that's Robusta bean. If you want to have a look at the one below it, which is the Arabica, and you think it's any different, you've got a channel being broken out here on the Arabica bean as well. So all of this dollar strength period, all it's done is set up a major flag. Have a look at this on a bigger time frame and realize that this is asserting, my friends. This is reasserting to the upside. This is continuation. This is your hyper-stagflation that I've warned about. Recessional conditions, but incredibly high prices, especially on global softs. This is why we have a setup for reset community. This is why you should have structures. This is why you should have precious metals metals and gold, regardless what the paper price is. This is why you should have multiple passports. This is why you should have so much that you should be talking to us even on those things, even if you're not interested in our trading, building wealth side, just protecting what you already have. You go to themarketsniper.com and you book a call. And if it's just reset protection, we're looking at building reset communities. I'm going to be looking at amazing properties that are, let's just say, farmland-ish, away from the city, urban, totally off-grid in terms of water and solar panels. We should all be thinking about your bug-out plan. Yep, I know, it's apocalyptic, he said, apocalyptic. I think he got it at the 5th go. Anyway, so what do we expect? We actually expect these to come off a bit. This was a great rally. Note how the head and shoulders performed there on the Dow 30. Good draw. Again, complex head and shoulders. I don't think I saw anyone else draw this. Same for the SPY. Also, target made. Don't think I saw anyone else draw it. Where did it die? At the top of its neckline, up in a rising wedge, and a little bit of a pullback now. Overall, I think that the equities have got away scot-free for now and had a long, lusty bear market rally, and I think that there's a lot of pain if those interest rates are going to go on up. Yes, indeed. What else do we watch? Well, you can also watch the likes of ARC, which won't like interest rate hikes. So we call this rising wedge, again, a pullback. So you've been mostly in a rising wedge here. No chance of pulling back anything near like the SPY or even the NASDAQ for ARC. So it's looking very fluffy at the moment, and potential for further downside continuation, but a little bit up on its last day. When was that? Was it 24th? We haven't opened for today. We'll see what our friends say on the other side. I've also mentioned to you HYGGG. This is high yield debt. Oh boy. This stuff should be near to worthless. In this inflationary environment of 8.5%, if the high yield debt is not paying you well over 10, even 12%, you're getting next to no yield for incredible risk. And these are already dodgy companies that are having to borrow to just struggle on. Wow. And TLT, another one we watch on the debt market. Boy, just off. And it's been a short all the way along. We were the first to say, yes, believe it or not, and I don't say that out of arrogance, head and shoulder, major head and shoulder here that was put in to everyone's shock and horror. We said, no, it should run 89 and go on and on and on. Look at that blow off, look at that, and then that, and we drew all of that, and the full details, again, are in our premium community and further downside. Sub 89, we said, and onwards, down. On TLT, man, oh man. And now what is it doing? Take the draws off. Let's just hide the eye again. Hide the eye. Yep. You can see reasserting to downside after that hammer that gave it short relief. That was during the period of the head and shoulders on the yield. Was the yield going to go down? No, it seems it's not. Back on. And let's also just remind you of our Italian friends of Euroland. Major problem on their yield going on. That's the monthly. We take it down to the weekly. You can see what's gone on there. Who would hold their debt? Up and away, down, and then you had a super spike here, and then no doubt a little bit of intervention. I did my spot the central bank intervention bid. Look at that, how it spiked up to there. Now that's a shooting star of intervention, but it's not going to be one that's followed too far down. Nobody wants to hoard this stuff. It is bad news. Touched 4.6%. Oh boy, the euro. And every time they do that, the euro should sell off because they are printing money to buy garbage debt. More proliferation. And remember, they've reserved the right. We're quantitative, we're tightening our interest rates, but we reserve the right to buy Italian bonds. Okay, so you're continuing to proliferate then. Therefore, the euro down. The Fed is just about tightening, I say, in terms of the amount that it created of money, the 6, the 7 trillion, the 4.5 trillion, the whatever trillion. They've done about 58 billion. That's a tiny bit, but at least they're not adding new dollars at this point. That is a reduction in liquidity. These guys are holding up a Ponzi scheme, yes, an Italian name, exactly for that. So there you go, guys. I will be doing a very good clip, more than just a milkshake. Watch out what's going on there. Be careful trading into these markets. a little bit, but all our core themes are being validated by price behavior. Yields up, bonds, buy bonds, wear coal, not diamonds. Buy bonds, wear coal. So in terms of all those people that have been saying buy bonds, wear diamonds, that's the retort. Definitely not debt markets, definitely dollar dominance, but so much more. We'll tell you about those other two pairs that don't involve the dollar at all later, and it'll be released on the Instagram account. One more time, go and join us for micro clips of vision, some of which from even our theory weekends, 30 seconds here, 1.5 minutes there, for all those that have complained about long form videos like this one. Okay, be careful if you're trading. The news could make it quite volatile, so the volatility could go up. Don't forget, we saw the VIX have its little bump up. I think I might have shown that in terms of what we were looking at. There we go. The Jackson Hole event has caused that minor bump. People are very peak complacency in the equity markets. So I think people haven't even taken this contraction seriously. They just don't want to sell because they always say, no, we will always regret it. We'll be buying the dip. Okay, we'll see. I think this time they push the pain far harder, far longer, and a lot of things go wrong. Don't forget also, China is in deep, deep trouble. Our USD Korean won. I didn't show you that one. I probably should. How long have we been speaking about this? We're the original gangsters that drew this and found this pattern and drew it on the macro monthly and have warned and said. Now you had a nice little push up, a little bit of a pullback on the way, no doubt in my mind, but you hit 1346. This on a setup that we have said before is epic of scale, epic of scale. How many times you heard me say, nice rounded bottom, whoa, rounded bottoms, yeah, whoop, there we go. And this is a proper level that's run well through the 1300 at a level that hadn't been seen since way back. You didn't close above the 1300 until the March 09. That's how far back you closed above the 1300. And we are through that level. And this has been one way. We were in from 1183. That's another trade that we've given you. And people have said, oh, when money, when moon. How about that? It's not half bad. It's not half bad. Look at that angle to the upside. You could be in things that are doing that when you're long, or just chopping around like that. That's pretty damn good, my friends, from 11197, and we're looking for a very big number. All those details, again, in the community. And there's been some adjustments to some of them as well. So if you've been watching previous YouTubes where you think you have the number, you now have the wrong number. Ah, yes. Ah, tricky dicky. Okay, thanks for watching. We appreciate the likes and the shares. Go and jump on the Instagram channel for the small form and the short form stuff. And watch out for that release when I do it. I will see as time allows. But first, our community, jumping in, getting in, building wealth in reset times. Oh, I promised you crypto. Nah, super quick. Bitcoin looks sick. Short answer, I promised you crypto. Cannot do what you promised to do. Promised you crypto. Bitcoin looks sick. So our prediction is, oh, look at that mess. Take that line off. Started on the monthly. If you think that's a bottom, no, I don't believe so. That is a continuation pattern. Okay, well, that's very difficult to see. It's very granular on such a time frame, but that is such a weak response to a terrible period of selling off. It doesn't change much when you do the weekly. No, doesn't change much. We called the rising wedges. We said, watch out the rising wedges, and you got those, and you saw that. Boom, 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 boom. Everyone was like, perma bear, horrible man. Just trying to dump my wet dreams of great financial wealth, chill it long rather. And in terms of this, I think we'll see what goes on in Jackson Hole, but you could get a big move out of cryptos, and I think that's flaggy. It doesn't look positive, but it could get a pop out the top spike. So I covered this with the community, why I think that is on a lower time frame. If you want that detail, you can join our community, talking to a trader just like you, a couple of years before you maybe, who's been enjoying trading the HVF method, mate. Thank you for watching. Thanks for the shares and likes. We'll catch you again soon. Bye for now.